We're going to look at the crypto Ethereum Classic and the Euro British Pound Forex pair. Stay right where you are. Hi, this is Tim from TradingStrategyGuides.com. Today we'll be looking at a trading range on the cryptocurrency Ethereum Classic and a descending triangle on the Euro British Pound Forex pair. We're going to look at that, but first let's take a look at the active trades. Later on, this week's trading maxim. As always, happy Monday. Let's take a look at the active ones. Bitcoin has been consolidating for a few days right there after hitting this high around 16.5 last week. I've followed the stops up to 15.103.23 to lock in 42.62.50, and I'm going to hold the stops right here until we see a new higher high. In case you missed it, I mentioned in Friday's video that I closed MannKind Corporation right here at 279 when it made this huge wick right here. In case you hadn't been following my videos for a while, long wicks like this typically signal reversals. If you still happen to be in this trade, I wouldn't jump out right this minute. I would put a stop loss right below Friday's candle right here and let it take you out if it makes a new low. I'm done with this one for right now. If you're in it and you need me to continue to track it, let me know in the comments below and I will watch it for the next few videos. Also, again, in case you missed it, I took a full stop on this USD Japanese yen currency pair when the market went wacko Monday morning of last week after the announcement of a projected winner in the US election. So I am done with this one for right now. Be careful trading this week. There will still be a lot of election news that could rock the market. That's all the active trades for today. Let's take a look at today's trade picks. Let's start by looking at this trading range on the cryptocurrency Ethereum Classic with the symbol ETCUSD. Just to be sure everyone's with us on this, a trading range is a consolidation with a strong support level like this one at 457 and a strong resistance level like this one at 582. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. And I will take a break of a trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We will buy a daily candle close above the range or above 582, or we will sell a daily candle close below the range or below 457. On the breaking candle, to enter a full-size position, we want to see the volume bar reach up to the volume average like so. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average. You should get at least 0.75. If you don't get that amount, I would stand aside on this trade. Stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So let's say for grins and giggles that this thing breaks to the upside just ahead of the close up here. I would prepare my buy order. I would look down here at the ATR, multiply that by 1.5 and measure that distance behind the buy order for your stop loss. Measure 1 ATR above the entry for your first target. Of course, it would be just the opposite if we're trading short. If after entering the trade we get a candle that closes back inside the range, I'll take the loss right then. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this with 2 positions. The first one has a stop loss and a take profit and automatically closes when the first target is hit. Second position will only have a stop loss and will be allowed to run. When the first target is hit, we have to move the stop loss to break even on the second position. I will only risk about 2% of my account on each trade. That's today's setup on Ethereum Classic. Let's take a look at the Euro Great British Pound. The Euro Pound has a descending triangle. The descending triangle consists of a strong support level like this one here at 88.60 with several historical touches or approaches of the line, and a series of lower highs as fewer and fewer traders are thinking about taking this long. Each time the price gets back down to the support level, it chips away at the buy orders until it finally breaks through. It should break out of the pattern with strong momentum. The descending triangle is a bearish pattern, and I will only take a sell signal on it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility. In this case, much of the volume decline has happened since the U.S. election took place a couple of weeks ago. Before that, the volume was kind of flat. I believe this huge volatility that's been going on is also a result of the election. So some of my typical indications of a great consolidation have been a little bit wacky. And I've seen this across the board on the currency pairs. Hopefully everything will slide back into place in the next few weeks. In any case, here's the trade plan. We will sell a daily candle close below the triangle or below 88.60. I'm not going to bore you with this whole spiel again. The management details are always the same. If there's at least average volume, enter a full-size position. If there's only 75% of the volume, enter a half-size position. Otherwise, stand aside. Stop loss is 1.5 times the ATR. First target is 1 times the ATR. If you get a close back in the triangle after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. Again, 2% risk maximum on this trade. And that's today's setup on the Euro British Pound Forex pair. Okay guys, this is how I manage these trades. You do you, all right? Make sure you understand what you're comfortable with and trade it that way. And to help me with that, I use the trading maxims to keep myself in line. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. Today, Tim's trading maxim number 11. Don't practice until you get it right. Practice until you can't get it wrong. I've probably said this 1,000 times here, but this is something one of my childhood music teachers told me. So often I would only practice a piece enough times to get through it once, and then I would just totally flub it up when it came time to play it for competition or in front of someone else. I've heard it said that to master something you need to do it 10,000 times. Well, to that I say, the more you practice your trading and the more trades you execute with your strategy, the better you're going to be at it. And more importantly, the more you do it, the more confidence you'll have in your strategy, which will allow you to continue trading with confidence even when you go through the inevitable dry spell or drawdown. Remember our Ethereum Classic trade plan for today. We're going to buy a daily candle close above the range or above 582. Or we'll sell a daily candle close below the range or below 457. And our Euro Great British Pound trade plan for today, we're going to sell a daily candle close below the triangle or below 88.60. For both trades, full-size position if you've got average volume or better, half-size position if you've got 75% average volume or better. Stop loss is 1.5 times the ATR. First target is 1 times the ATR. And look in the description box below for a link to the trade management video. Don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box. Don't miss the Dream Trades segment on Wednesday's videos. Click the link below to find out more about Dream Trades. Come back Wednesday for the next installment of the Trading Education Series. This time we're going to talk about indicators. And be here Friday for my Strategy of the Week and next Monday for my Trade Pick. Our videos come out at 3 p.m. Eastern Time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you Wednesday.